Hey, friend, welcome back. As always, I'm your host, Brian Davis, co-founder of Spark Rental, and I'm on this journey with you. Quite literally, I invest my personal money every month in each group investment that we make together in our co-investing club. And today we are asking just how passive is real estate investing? Is it truly passive? We've brought on Litan Yahav from VYZER. So, Litan, take it away. Let's hear about this.
Yeah, thanks for having me. So just as there's this misconception when it comes to real estate investing, when people get into it thinking, "Oh, I'll sit at home, watch TV, and I'll just have cash flowing into my bank account, or I'll have a W-2 income and I'll just have cash coming into my, bank account without having to do much." And essentially, it's a lot more than that, and it can be a total nightmare. It could also you can have like a lucky situation where there's like no conversations, but even if it's obviously if it's fully active and self-managed, it's a lot of work, tenants and evictions and issues from municipalities and payments and things break down. There's a lot of mess. And even if there's a property management company in place, they're going to call you and say, all right, we need to do this. What do you think about that? These guys want that. So there's a whole I'm not saying it's a bad investment. I'm just saying people just usually underestimate the amount of work that goes into finding and operating such rental properties. I found when I sold a startup 9 years ago, started to invest. First investment with two parental properties, and at the same time invested in some LP deals as a limited partner syndication. And I was getting better returns doing a lot less work with those syndications than I was with these rental properties. Just turned out to be a complete nightmare and a ton of work.
Yeah, I mean, I spent many years as a landlord myself and as an active real estate investor, and it was a ton of work. I mean, it was so much more work. So, I mean, yes, there's work in managing the properties, there's work in managing the manager, even if you hire a property manager. There's also a lot of work in finding the properties in the first place, finding good deals. You can't just walk out to the deal tree and start plucking deals off of it, right? And you have to learn the ropes. You have to learn all the skills that you need to successfully do this. And all of that takes work, as opposed to just plowing money into an index fund, right? Which is truly passive. So how do you invest passively in real estate, truly passively, as opposed to going out and buying investment properties yourself?
So I think it's important to set the standards of investing from a passiveness approach. So when I look at my investing strategy, there's how passive active is this investment, and what are the expected returns from a cash on cash, IOR, ROI, whatever those are. And for me, if I'm going to put more work into it, meaning create more active, like two x more active, it has to be at least 2x more profitable. And so, that's the way I look at it. And so like my investing today, I saw that, as an active real estate investor, I was, spending 4x the time and maybe making 1.5x or even 1x the additional profit. Whereas I could go the other direction, and super passive real estate investing is investing in a publicly traded REIT. That for me was like, all right, there was no passiveness, there was like no activeness at all, but the returns, like let's say it was a third of the work, but it was like, it was a lot less than a third of the return. So it was just like it wasn't really worth it. What I found was like investing as an LP in syndications, funds with good operators. It was like so much less work, so much higher returns, or even the same returns and less work is still more worth it for me.
Yeah, it makes total sense. And one other challenge with REITs that no one really talks about is their correlation to the stock market at large, which largely defeats the purpose of diversifying into real estate, right? So, you can look back at REITs returns and you could be, impressed by them or not so impressed by them, but either way, they still have a surprisingly, or not surprisingly, but they have a disturbingly close correlation with the broader stock market. So are you actually diversifying your portfolio at that point? So yeah, I have become a huge fan of real estate syndications, of funds, of notes, and other truly passive ways to invest in real estate. You get all those benefits of real estate investing without all the headaches of becoming a landlord. So I love that. Litan, in 30 seconds or less, how do you help people? How does your company help people? And how can listeners connect with you?
So essentially, I'm the co-founder and CEO of VYZER, and we basically help investors keep their investments passive. So we help track, manage, and all the administrative stuff of managing investments, tracking investments, automating the aggregation of everything into one place.
I love that. And how can people connect with you or hire VYZER if they want to automate tracking all of their investment returns?
All right. So it's our website is VYZER.co, so VYZER.co. Just head over, sign up for free. I'm Litan, Litan at VYZER.co. So happy for anyone to reach out to me. Also, social media, I'm pretty responsive.
Litan, thank you so much for joining us today. And guys, if you enjoy these conversations that we have, these quick hit bullets to make your day brighter and your investing better, please rate, review the show on your favorite podcasting platform. It makes the world to us. And we will catch you same place, same time next time.
Like the idea of diversifying into real estate, but don't want the headaches of being a landlord? Enter passive real estate syndications. You buy fractional ownership in apartment complexes and other large-scale properties. Earn your share of rental income and your share of the profits when the property sells. In fact, most of the syndicators we've invested with have average returns over 20% per year. You even get full tax benefits, including accelerated depreciation. Even as you collect distributions in real life, you often report a loss on your tax return. So why doesn't everyone invest in real estate syndications? First, you typically need to know the syndicator to invest, and the minimum investment for each property is high, usually $50,000 to $100,000. That's a lot of money for a single investment, which is precisely why we formed an investment club to pool funds and invest together. Every month, we propose a new deal in the co-investing club and vet it together on a group call with the syndicator. Each deal is purely optional. Pass or invest as you like. As for us, we invest our personal money alongside you in every single deal. If you want to invest like the 1% without actually being a 1%er, join Spark Rentals Co-Investing Club. Email us at support@sparkrental.com with questions, and we look forward to investing alongside you.